Go Gold Trader coming to you Sunday evening, January 6th, 2013. I would like to go over the long-term daily chart on gold futures, GC, for the February contract. This is video number 3 in the series. I'm trying to complete a weekly video, if not more often, for 2013 on both gold and the general equity markets, the S&P, NASDAQ, and Treasury bonds. So for this past week, after I spoke about the financial cliff possibilities of the price of gold moving one way or another, we see that gold popped up a bit, uh, and then again it popped back down, testing support down here, the lower levels at around 1636, 13, 1630, in that lower area here that I'm pointing to you right now. As you notice, gold, the price of gold is now below both the 200-day moving average, the green line, and the blue line, which is the 50-day moving average. We now have a downward sloping price channel to the downside, to the short side on the price of gold for the last couple of months. In the previous 2 videos, we talked about a wedge that was building out, a long-term wedge. Well, this is still the top line, the top edge of that wedge, but I eliminated it and deleted the bottom wedge. Sort of still here with this 200-day moving average. Um, so that wedge is now negated and not relevant anymore. The price of gold did break down below the trend line on that bottom line of the wedge that I noted in the first 2 videos. We are now testing at the lows. The trend definitely is on the short side for gold in the short term. The projected daily range for gold is anywhere from 22 to 26 points, average daily range of movement. The weekly range would be around 43 points or so. Monthly range would be about 90 points or so, according to my calculations. Right now we're testing the December lows of around 36, $36, 1636. I would expect with the price of gold, the momentum is certainly to the downside, to the short side, to continue to the downside under 1600 by maybe this week or the following week. Possible uh, downside price targets are at 1579 and 1551, way below the $1,600 floor that we talked about many times since last year. Um, we still have a little bit above normal um, volume coming in on the short side, so still a lot of short players coming in. According to this week, again for the last, if I can recall correctly, commercials are still net short to the downside, pushing the price of gold, continue the price to push the price of gold to the downside. And I don't, at this point, don't see anything to change that in the immediate short-term future. And as we know, gold reacts to the price of to the charts as far as interest rates and unknown financial uncertainties. At times when the markets are uncertain, both in equity and debt, the price of gold will also sell off because people just want out. They want to just move to cash and transfer to cash. And they sell paper and they'll sell bullion. And of course, that's probably not the correct strategy, but that's for another video on trading entries and trading exits. But right now, as we see, the channel is definitely downward sloping for the price of gold. We have some targets I mentioned. We did hit the Fibonacci retracement at 50% earlier um, in November, December. I talked about that, and then we came back down. So we just have a lot of weakness here in the price of gold. Um, Looking, let's see, long term, we had ever since going back to July of 2011, about a year and a half ago, when we hit the all-time highs in the price of gold over 1900. We see we had a double top here, and then progressively as time went on, we had lower lows. Another double top at new lows here. New lows as the trend line was down to the downside from that all-time high a year and a half ago. We never did reach those new highs yet. And looking at long-term, this is resistance. Double top to the high upside resistance. I have a little bit of head and shoulders pattern here. Another head and shoulders pattern here. Very common in trading. And if you take a look at the support here at the bottom, ever since looks like around August, September 2011, in this area here. Then we had another support test at this area here toward the end of 2011, December of 2011. And lots of activity and lots of support again in that area. And then that area again would be around 15, let's see, 1560, 1550, 50, from 1550, 1560, 1570 area. So it's definitely possible that we can see the price of gold push back down to that area. Of course, if we get back down to that low, it could be a buying opportunity, but I'll address that at that time, and looking at other fundamentals on the reasoning why, and I'll let you know if that's a good buy to get in at those low levels, low price levels, I should say. So that's it for the gold. Just take a look at this on your daily chart. I'll try to add some more day trading charts, shorter term trading charts, to give you a heads up on how I trade on a daily basis or on a swing basis for that fact. Okay, I think that's it for gold. Let's move into the S&P and equities. Take a look at that market. And again, this is the longer term daily chart on the S&P ES, the futures contract. And this could be transferred also to the SPYs, SPYs. Okay, we talked about this in videos 1 and 2 about the regression trend line to the upside. As you see, we had that major push down twice. We had 1, 2, 3, 4 days where it pushed back down to the lows there. Actually, it hit under 1400. And then again, bam, pushed back up to the upside, up to that, going back to that mean, tested, went below the regression line, the standard deviation, and pushed right back, back to the rally, pushing this rally to the upside. As gold fell, the S&P and equities pushed up. Sometimes they work in tandem, sometimes they work opposite. Depends on many variables. I'll cover in different videos according to the price of the U.S. dollar and treasury bills, treasury bonds, and how they push which way. Sometimes they're in tandem, sometimes inverse. Sometimes everybody sells everything. Depends on how much fear there is and uncertainty there is in the market. It used to be in the old days, 4 or 5 years ago, everything was inverse. You could, set your clock by it. But now things are just so different now. New normals right now. Take a look at the volume. Volume's still weak. If you take a look at this, it's still pushing down to the downside. A lot of weak volume here on the S&P. Just a lot of uncertainty. And the same thing for the S&P and the ES futures contract. Commercials are net short. Again, they've been net short for quite a while. So although they will push the price out to knock out shorts or knock out amateurs, the long-term trend in the S&P is still, in my opinion, to the short side eventually. Right now we have to get past this rally here, the first of the year, 2013. But eventually I would imagine it's very possible as we continue to hit more resistance to the upside. Here we have a heavy resistance here at 1460, 1465, 1468. And I can see a scenario where the S&P starts pushing down dramatically to the downside, testing these new, lows from back around November, and looking long term, lows from way back in May and June of 2012 down here under 1300. Looking at the fibs, we already hit our retracement, or it already retraced to the 50%, pop back up, and again, the price right now is above both the 200 and the 50-day moving average. And as you know, the price always has to come back to the average. So eventually this price will come back down one way or another to hit this 200-day moving average and or the 50. 50 first, obviously, and then bam, down to the 200 as the 200 creeps up a little bit. Taking a look at some of my ranges I calculated for the S&P. Short-term trend is bullish. We have some targets to the upside between 52 and 71. Right now, the S&P is trading at 1455 in the overnight market. It's around 11:22 Central Time. So we're definitely in that range for targets to the upside for this week. As long as it continues to stay around 1460. So right now we're at 55. So around 55 to 60, we're going to continue to keep S&P will continue to have strength for the rest of the week. The projected daily range on the S&P is around 24 points or so. So it can move average around 23, 24 points. Weekly range is around 42, and then around the monthly range, projected monthly range is approximately around 76 points or so. Okay, that's about it for now. I want to thank you. Again, this is Ruben Lisiaga, Chicago Gold Trader. You can find me on YouTube, on my website, chicagogoldtrader.com, or on my Facebook page, Chicago Gold Trader. Just ask for membership. I try to publish more videos on a weekly or bi-weekly basis, twice a week if all possible, and give you my take on the markets and possible targets and ranges and on things I've done, accomplished. And enjoy the Southside Chicago Blues, written by Willie Dixon and performed by a Southside band. Thank you very much for joining me. I'll see you next time. I got the time to come true.